Order blocks are a foundation of institutional trading. And today I'm breaking down a simple order block trading strategy step by step, including my personal TradingView setup and indicators. But alright, so now let's take a look at the order block trading strategy step by step. And right now we are in TradingView. By the way, if you for some reason haven't gotten started with TradingView yet, I do have a special link. That link is both in the top comment and the description, and you can use that to get a free TradingView Premium for 30 days and $15. But alright, so let's begin here with how to identify the order block. And here, the first thing to look out for and the easiest way to spot them, at least in my personal opinion, is to look out for these massive candles, like for example right here. This right here is what I call a momentum candle. A momentum candle is basically a candlestick that is at least 2 times as large as the cluster of the previous candles, but preferably I want this candle to be maybe 3 times or even 4 times as large as the previous candles. So the first thing I look out for is a strong momentum candle. But also remember here, let me actually go here to geometric shapes. This is a tool I'm using a lot, the rectangle tool right here. Also remember that in order to have a valid order block, we want to look out for an area of consolidation here, at least preferably before we see this strong candle. Because this is actually the area we will later on use to find entry levels. Like for example, right here, you can see the beautiful entry level we saw right here. And after that, you can see that the price actually exploded here to the upside. But now, and this is very important, and this is also a question I have been getting a lot, and that is, how exactly do we draw these areas? Because these areas are very important. And the answer here is, the truth about this is that many traders have slightly different variations on how to exactly draw these areas. But as a general rule of thumb, you want to try to include the consolidation area. You can just have if you want a mechanical rule, you can choose a certain amount of candles. Like for example, you can choose that you include 5 candles, so 1, 2, 3, 4, 5, and you include the whole bodies of all of these 5 candles. So after you have drawn out your order block and after you have identified this momentum candle, the next thing you do want to do, remember from earlier in the course, is that we need to look at the volume, because if smart money is really stepping in at this level, we should see a spike in volume. So let's actually analyze the volume right here. We can see that the move was right here. And if you go down here to the volume, you can see just as what we predicted, we saw a massive increase in volume. So this right here is a good sign. When you have followed all these 3 steps, you have your order block, you have the momentum candle, you have the volume, then we are all set. The next step here is a waiting game. So you can see the price goes up, but then eventually the price came back down, and you can see it came back down and then we touched the zone. This right here is our opportunity to actually enter. Some traders enter at the order block, some traders wait for the confirmation. So some traders would enter right here, some traders would try to, maybe have limit orders, right? Maybe have limit orders at the order block. By the way, if you want to learn more about the different order types, I do have a video about that, and I will make sure to link it up in the corner and the description. I do highly recommend to watch that one. But here, another thing you can use to improve your order block trading strategy even further is to use price action. And price action is basically the study of how price moves, and included in price action we have things like candlestick patterns, we have things like how prices reacts to certain levels, like for example how the price reacts to order block. And if you look closely right here, you can actually, if you look at these 2 candles, we can actually see that this is what we call a BE, or in other words, a bullish engulfing pattern. This is a bullish Japanese candlestick pattern indicating a move here towards the upside. So here we actually had yet another bullish sign indicating a move upwards. So after we have seen all of these bullish signs at the same time, we're ready to actually buy. We're ready to use our long position. If we enter here at the candle close of the bullish engulfing, when it comes to stop loss, some traders set the stop just below the order block or just below the pattern. In this case, I would actually set the stop loss just below the pattern because it was a massive pattern. And then using a risk to reward of 2, our trade would have looked something like this, and we would have locked in some nice profit. But alright guys, so in order to use order blocks effectively, I highly recommend to learn more about price action. So if you have the time, make sure to check out this free trading course next. Simply click or tap on the screen right here to get to the video.